If you're just holding dollars and not getting yield on them, you're effectively losing money, right? So if you want to be a participant in the on-chain economy, you want to have a way to park your money in a way that generates yield. Yield-bearing stable coins are the way to do that, and there's going to be a lot of competition with that space.
Alrighty, what is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video, I'm going to go into detail and show you guys undeniable proof that the regulatory landscape is for a fact shifting exactly how we have been saying that it would. DeFi is no longer just the future, it is becoming the regulated present. A level playing field is for a fact being built where we as individuals can operate alongside institutions and truly become our own banks. This is for a fact of reality, whether people are ready for it or not. And so here in the CYPRX Well 28 Club, we firmly believe that this is the most critical time to learn how to put your digital assets to work. It is time to break out of the having your assets idle mindset and shift into an active yield generating strategy mindset, right? And so this video breakdown is just going to show you guys detailistic fundamentals, video clips, and panel discussions from some of the world's largest organizations and most important regulatory bodies that all of this is for a fact happening. I'm actually surprised that I'm just finding out and stumbling across this information now. But all of this stems from my search for regulated yield or compliant yield from my idle cash. And so this is some of the information that I stumbled upon. First, I want to start here, right? As we've seen the markets recently turn around, depending on when you're watching this video breakdown, the markets just recently sold off over the weekend. Today, as of time of recording, it is Monday. And then today the markets turn around and flipped. I don't know, what is that? We saw like an $80 billion inflow today, something along those lines. Well, we got this fundamental piece here, and it says, Fed ends reputational risks oversight and eases crypto restrictions. This just came out from Watcher Guru, June 23rd, 2025. There's an actual Federal Reserve report on this here where you can go and you can actually read the release. But just to briefly touch on what Watcher Guru said here, the Federal Reserve is officially ending reputational risk oversight, easing crypto banking restrictions across the US. This is massive. The Fed board announced that reputational risks will no longer be a component of examination programs in its supervision of banks on Monday. The board has started the process of reviewing and removing references to reputation and reputational risks from supervisory materials, including examination manuals, and, where appropriate, replacing those references with more specific discussions of financial risks. The Fed said in an official statement, the board will train examiners to help ensure this change is implemented consistently across board-supervised banks and will work with other federal bank regulatory agencies to promote consistent practices as necessary. The Fed previously rated institutions' reputational risk on the entire spectrum of risks facing a banking institution, including credit, market liquidity, operational, and legal risks. This move not only eases banking regulation, but opens the door for lesser crypto regulation and for institutions to operate crypto project offerings. Those efforts have also spread to the Securities and Exchange Commission in the SEC, which has eased up on its own regulation over crypto firms and the entire industry. And so I wanted to highlight this one last key detail because I'm going to show you guys physical proof that this is a fact. For the first time ever in history, we're seeing regulated yield products that both retail and institutions can participate in. So just briefly plugging this in to ChatGPT, why is this bullish for crypto? Why is this announcement from the Federal Reserve Board of Governors? Why is this anything special? Number one, the removal of reputational risk removes subjective biases. In the past, banks were penalized for engaging with crypto firms under the vague and subjective idea of reputational risks. Essentially, the stigma or public perception around crypto could be enough to shut down relationships. Now that the Federal Reserve is eliminating reputational risks from its supervisory framework, it becomes harder for regulators to arbitrarily deny banking access to crypto companies. I'm nailing these fucking vocab words right now, y'all. Number two, it sets a clear path for banks to re-engage with crypto. Banks can now legitimately service crypto clients, exchanges, token issuers, DeFi startups, that's important, without fear of regulatory backlashes due to bad optics. Number three, it signals a softer regulatory shift across the board, where the SEC has already begun softening its stance in parallel, dropping investigations and greenlighting ETFs. And then last but not least, it encourages institutional participation. And so I just wanted to show you guys physical proof from an institutional investor. This is Sandy from Franklin Templeton. This video was uploaded only 10 days ago. And I want you guys to listen to how she goes on to talk about how right now they're offering these yield bearing solutions to their clients where they can earn yield every single hour, every single day, and they can decide what to do with those profits, whether they pay themselves passive income, whether they compound. I just want you guys to hear it from a financial institution that these are, for a fact, these solutions being offered to their clients. So just take a second and listen here.
In terms of the functionality that you have seen unlocked because you're working on chain, what are some of these things, and in what ways do you think Franklin Templeton and other firms could, maybe do things on chain that they weren't able to do before?
So I'm going to point to three specific examples, Cami, because I think they're just so exciting, right? So the first is today in a traditional money market fund, which is kind of the most basic instrument of the traditional financial ecosystem. The way that it works is it only trades Monday through Friday. There's a market open, there's a market close. No one can calculate the shareholder record until after the market closes and all the trades are reconciled. And so I can't figure out who earns the interest from that day's trading until after the markets have closed. And if, let's say, you had owned the money market fund for only a portion of the day, if you're a big corporate treasurer and you move money in and then you needed to pull that money out before the close, you don't get any interest for that day. So the three most exciting things we've been able to do with our new platform is we can calculate the shareholder record second by second. So we have an exact shape of the shareholder record. So if you own the fund for 3 hours and 2 minutes, but you don't own it at the close, you still get 3 hours and 2 minutes worth of the yield when we are calculating in our system. The other thing we've been able to do is because we pay out that yield in incremental issuance of new tokens, because the token is the exposure to our fund. It's not just a copy of an off-chain record, it is the actual exposure. So we pay out yield in incremental new issuance. And as a result, we're able to pay out yield every single calendar day, including Saturdays and Sundays and holidays. And in traditional money market funds, they accumulate that yield over the course of an entire month and only pay it out once a month. So we pay it out every day. Most traditional money market funds pay it out once a month. And then.
Okay, so I just wanted you guys to hear institutional confirmation. Remember, Franklin Templeton, probably a heavily regulated, I can't say probably, is a heavily regulated organization, just openly said on a panel discussion 10 days ago that they're offering these solutions to their clients, right? For them to garnish the ability to generate yield every single hour of every single day and do with it what they please. Okay. So back to today's fundamental digest and what we're going to go over. Figure markets. All right. So reading this here, it says, do you want to earn 9% real yield on your cash or stable coins sitting on the sidelines? With democratized prime, your funds earn yield backed by cash flowing mortgages, no lockups, withdrawals available every hour to buy the next dip. And when I saw this, I was like, wait, hold on a second, figures markets. Well, this was a panel discussion that was recently shared in the private CYPRX Discord from 2 weeks ago and only has 63 views. Listen to what this gentleman here says. I don't remember specifically what organization he stems from, but the organization he stems from deals directly with financial institutions. And listen to what he says about figures markets being possibly the best stablecoin that has ever launched in the history of crypto.
I think the best stablecoin ever was launched 5 weeks ago. It's Figures Yields, YLDS, SEC registered, yielding stablecoin. The Genius and the Stable Acts are putting forth regulations to regulate non-yielding stablecoins in the US, which I think is great and absolutely is needed. But why would you have a non-yielding stablecoin when you could have a 4% yielding stablecoin that's available to the public in the US?
Okay, so I don't know if you guys could hear that clearly. I apologize if you couldn't because the volume is relatively low on his microphone. But long story short, he said that he believes the best stablecoin that has ever launched in the history of stablecoins is this new yield-bearing stablecoin that was approved by the SEC called YLDS from this organization Figures, right? And when I heard that, I was like, wait, what the heck? I just saw this post on X, and then I heard this gentleman say it. So I had to look a little bit deeper. And this is where it gets pretty dang mind-blowing because keep in mind what was just announced today, right? Keep in mind that what this does is, it it literally lessens the efforts. It says right here, those efforts have also been spread to the Securities and Exchange Commission, which has eased up on its own regulation over crypto firms in the entire industry, right? And so this just goes to prove that this fundamental piece is for a fact happening. The regulatory landscape is shifting, and the regulators are now telling us that we can earn yield on our digital assets, specifically like stablecoins. So check this out. This is from February 20th, 2025, so it's relatively fresh, and it says, Figures Markets is a leader in decentralized finance and has launched the first interest-bearing transferable stablecoin native to the public blockchain, registered with the Securities and Exchange Commission. YLDS is a public security offered through Figures Markets, wholly owned subsidiary. Figure Certificate Company is a fixed price, daily accrual public security native to the Provenance blockchain. Yield, or I'm just going to call it yield, it's YLDS. YLDS or yields can be transferred peer to peer and is backed by the same securities that prime money market funds hold. YLDS marks a transformative shift in financial applications built on public blockchains, offering holders the ability to earn interest, transfer securities peer-to-peer, and transact 24/7. YLDS utilizes Figures Markets self-custody wallets, giving users full control over the tokens without relying on third parties. We're going to get into all of the solutions in detail as to what this whole entire platform offers because it's a lot. Lending, borrowing, all kinds of stuff. All right. Yield almost double digits. I believe they offer up to 11% yield in some of the strategies that they offer. We'll get into that in a later portion of this video breakdown. Starting today, both individuals and institutions, as you can see right there, can purchase YLDS through Figures Markets. Figures Markets, working with its sister company, Figure Technology Solutions, has been a leader in the real-world asset space on blockchain, supporting over $41 billion in real-world asset transactions on the Provenance blockchain, with over $13 billion in real-world asset total value locked on-chain. YLDS will add to that number. So let's dive into this project. So going back over to the Figures Markets X profile, it says here, for the first time ever in DeFi, keep in mind, this is just posted June 3rd, 2025, you can now lend shoulder to shoulder with institutions and major hedge funds on chain. This just goes to prove that what myself and Aqua were telling people over a year ago, that we're going to operate on a level playing field with financial institutions, is now happening in real time in a regulated fashion. Targeting 8% APY by lending into a pool of real-world cash flowing assets originated by Figure, the same team that unlocked $15 billion in home equity. And here in this little tiny infographic, it says, things like, let's just look at this. It says, want your cash earning the same rates that hedge funds do? Lend like you're a bank, right? So right here, it's literally telling you all, we are the banks. Lend like you are a bank targeting 8% return. What have we been talking about in this community? That we are now becoming our banks, and this will all be regulated. So right down here, Figures actually posted a reply to this post and said, you are the bank, right? So that again, piqued my interest to dig a little bit deeper. So looking into this, it says Figure Markets is the digital asset arm of Figure Technologies, a company co-founded by Mike Cagney. Hopefully I'm pronouncing his name correctly. I'll show you guys his LinkedIn profile here in just a second. The former CEO of SoFi. The firm has played a key role in blockchain-based real-world asset tokenization, processing over $41 billion in transactions, originating $11 billion in home equity line of credits using the Provenance blockchain. Figure filed paperwork to the SEC to launch a yield-bearing stablecoin offering back in October 2023. And now for the first time ever this year, it got approved. The SEC Securities and Exchange Commission granted the crypto industry a victory on Tuesday. This is a fundamental piece back from February 2025. Approving an application for an interest-bearing stablecoin for the first time ever. A filing on the SEC's website, here it is right here, you You can see all the filings. A filing on the SEC's website reflects an approval of Figure's application on Tuesday. A spokesperson for the agency did not immediately respond to a request for comment. We think that this is hugely transformative. Kaney, who was a previous CEO of the publicly traded financial company SoFi, told Fortune, "If I can hold this," he said, "if I can self-custody this," he said, "if it pays me interest and I can actually use it to transact, then why do I need a bank?" Right? That is massive considering that this was approved by the SEC. Okay? So going over to the LinkedIn profile and just digging a little bit deeper to try and find out the solutions that this platform offers, it is pretty gnarly. So let's just dive into those and go back a little bit as to why this is so important. Do you guys remember David Schwartz sitting on stage with a Stellar Development Foundation representative? His name is Tom Whaler. This is from March 27, 2025, only has 1,000 views, and listen to what this individual representative from Stellar says about the importance of your cash not sitting idle and instead earning yield on it.
Yeah, I think, the more yield-bearing stablecoins we're going to see, the more competition there's going to be around, how much yield and how is it distributed to the users. And so I think this place where we're at right now, where there are a bunch of stablecoins and functionally they're doing the exact same thing, I don't think that's going to stay for long. And, people are realizing, I made this equivalent for like a checking account earlier. If you're just holding dollars and not getting yield on them, you're effectively losing money, right? So if you want to be a participant in the on-chain economy, you want to have a way to park your money in a way that generates yield. Yield-bearing stablecoins are the way to do that, and there's going to be a lot of competition with that space.
Keep in mind what the gentleman from this tokenization event said, that he believes that this yield-bearing stablecoin, which is the first one approved by the SEC ever in history, is the next big thing. Then you have a video breakdown, a Stellar Development Foundation representative saying that yield-bearing stablecoins are also going to be the next big thing, and that we all should have access to this, and now we do. Right? Now we do. So back to the Figures Markets LinkedIn profile. It says, earn 8% APY with Figures Markets' new $15 million real-world asset pool. We have officially opened the first ever decentralized real-world asset pool in our borrow and lend pool's democratized prime. This means that you can now earn a targeted 8% APY by lending into a $15 million backed pool by home equity lines originated by Figure, the same team that's helped unlock $15 billion of homeowner equity over the years. Home equity borrowers pay 9.5% interest to Figure for their home equity line of credit. Since Figure is so profitable on these, they put $120 million of cash into their coffers last year. The same loans that are getting put into Figures Markets for you to lend against, which means that you are indirectly tapping into the $120 million Figure profits. To get started, it says down here, all you have to do is deposit USD or USDC, then pick YLDS, HELOC, and lend. Interest will start kicking in right away, and it compounds daily. Withdrawals are processed hourly. And so this just goes hand in hand with what Sandy said that they're already offering to their clients, which just goes to show that institutions are using the same exact thing, which yet again confirms this idea of a level playing field. Okay. It's almost sickening that people cannot see this. And there's yappers on the internet that are like, oh, it's not happening. Well, it actually is. And it's regulated, right? Introducing the first ever new type of SEC regulated yield bearing stablecoin that is transferable. YLDS. Interestingly enough, on this Figures Markets platform, they also offer you the ability to swap and trade XRP. Right? What's Ripple been up to? New stablecoin RLUSD hit $3 trillion in volume. Acquired Hidden Road for a $1.25 billion acquisition. Payment networks now live in 90 plus different markets. So I just find this interesting that they offer XRP. Think about what we were talking about last Friday. Maybe if you do want to sell your XRP for some profits, well, here is a regulated stablecoin that you can do that in. And when you do, guess what you can do? You can earn yield on it by lending it out, borrowing against it. And then if you want to go buy yourself something nice, boom, there you have it. You're doing it in a regulated fashion while your initial capital is earning yield, still remaining liquid in this space and involved in crypto. Okay, instead of selling for fiat that does absolutely nothing for you. Back to this, it says, where are we at? Okay, so this was another interesting post from Figures Markets on their LinkedIn profile. It says the meme coin casino might be picking back up, but What you're doing is re-entering a zero-sum battlefield with your pain equaling someone else's gain. The PvP erupts when fresh capital dries up. Prices move only because traders outmaneuver each other. How many times has Institutional Scalper said that in our private Discord? I know he has. Not because value is being created. Value creation is when something generates cash flow, income that did not exist before. And this just goes hand in hand with what Kev said at the end of our call last week on accumulating more assets that are going to accumulate you more assets, continuing this cycle of just putting your money to work, a never ending looping strategy that constantly generates you passive income. Why does this matter? Because cash flow equals payback. If you buy a real world asset, it can earn for you over time, right? What did we talk about in last week's call? Purchasing a house through DeFi, right? Instead of getting out of the crypto ecosystem, utilizing your crypto to buy that house for you. With meme coins, there is no cash flow. You only make money if someone else buys higher. With real world assets, they are productive. Cash flowing assets on chain, those cash flows come from the environment, securities generating interest, tenants paying rent, not from exit liquidity. That flips the game to PvE. Real world assets don't banish speculative trading, but they inject real yield and net new value, tilting DeFi from PvP toward a sustainable PvE. Real world assets let you earn yield from real assets. The faster DeFi adopts real world assets, the sooner crypto stops feeling like a casino. Then if we come over here to continue down this rabbit hole, they also received recently on June 13th a AAA credit rating for the first time ever. Just in, Figure Technologies just made history, getting the first ever AAA credit rating for $355 million in mortgages on chain via Providence Finance. This means top tier debt is now tokenized. Another win for real world assets. Again, yet more solidification that this is a valid, trustworthy platform. Here is the platform itself, your crypto, your keys, your exchange. Very simplistic. You have some tabs up here, the trade tab, crypto exchange, private funds, the borrowing tab, the earn tab, where you can go and tap into the YLDS token and democratize Prime. Then you have some resources via insights, the white paper, the learn tab, which is extremely important that if you are going to use this platform, you go click around on, and the about page with some other very informative articles and links here. As we continue, here it says, this is another thing that sparked my interest. On Figures Markets, you can use your Bitcoin to get more Bitcoin. Now, they offer XRP trading. Maybe in the future, when the XRPL EVM sidechain and staking features become more prominent on XRP, it is my speculative nature that they will also incorporate some type of ability for us to do the same with XRP. That is not available now, but definitely something that we can all speculate on in the near future. But it does say you can use your Bitcoin to get more Bitcoin. With your crypto-backed loans, you can buy up to 75% more and amplify your portfolio, right? So it's literally just going on to talk about these looping strategies that we've been mentioning. You can earn passive income, borrow against your crypto, and trade when the time is right, all in one place. And so Be In Crypto went on to write a full breakdown on all of the solutions that this platform provides. And so I want to thoroughly go through them real fast before I give you guys the just couple of video breakdowns that I found will help you guys kind of navigate and understanding verbally of what this platform is, and then we'll end it there. So check this out. The Figures Market Guide, What to Know About the Self-Custody Exchange. This is from April 2025, so relatively recent. Some key takeaways we're going to discuss is what makes Figure Markets different, Figure Markets origin and leadership, and the regulated asset blueprint for compliant DeFi. So what makes Figures Market different? Figures Markets combines a passive income borrowing and trading into one platform for both active and long-term strategies, where users can earn yield through products like Forward Vault, YLDS, and P2 Prime, borrow against crypto with transparent terms and no credit checks, trade with zero fees, fast execution, and decentralized custody, and retain full custody of their assets while benefiting from centralized liquidity on-chain transparency. Here it mentions the first solution, the Forward Vault, real-world yield on idle cash. The Forward Vault allows you to earn up to 7% net yield by allocating cash into a fund backed by home equity line of credits. These are established financial instruments used by banks for decades and are not speculative by nature. So why on earth, after reading something like this, I'm thinking in my head, would I want to have any money in a bank account that's earning me jack shit when I could just go put some money into this platform, have a crypto native debit card from crypto.com or MetaMask or one of the many others out there. I'm just naming a few off the top of my head, where if I want to go spend my money, I can take some yield from this, platform, pay myself with that yield, and then go spend some money, right? While have my idle cash sitting there earning me 7%. Okay, and that's not as good as it gets better. YLDS, a regulated yield bearing stablecoin. Most stablecoins do not generate yield. YLDS changes that by offering the first SEC registered yield bearing stablecoin on a public blockchain. It launched in February 2025 and issued by a Figure certificate company subsidiary of Figures Markets. YLDS pays a net yield of SOFR minus 0.5% or 3.8% as of April 2025, with interest distributed monthly and either YLDS or USD. P2 Prime, margin lending without complexity. This is another solution that it offers. P2 Prime lets you lend out your USD, crypto, or stablecoins to margin traders without trading yourself, and in return, you can earn up to 11.9% yield as of April 18th, 2025. That is huge because that confirms right there that both retail and institutions have access to double-digit yield, which is another thing that we here in this community have been paying very close attention to. Are yields going to throttle down, or are they going to stay above 10% into those double-digit figures? This is now the second institutional-backed platform that announced double-digit yields this year. The other one was Drift with Apollo, Securitize, and the other platform escapes my mind. But yeah, with Apollo and Securitize, Drift Institutional. Okay. Anyways, they also offer crypto-backed loans, borrowing without selling. I highlighted that in bold because that's something that we've been screaming at the top of our freaking lungs, right? We don't have to exit the crypto market. We can borrow against our assets, stay liquid, stay in the crypto game, and put our assets to work. So Figures Markets, crypto-backed loans, lets you borrow cash against your Bitcoin or Ethereum. Hopefully one day it says something like XRP without needing to exit your position. This means that you can stay invested while accessing liquidity all in one platform. Then it also mentions here decentralized MPC custody, self-custody with centralized safeguards. So Figures Markets assesses a multi-party computation or MPC to protect your assets. MPC splits them into shares held by separate hosts instead of storing fully private keys in one place. Security entitlements, legal and technical clarity. Each deposit or asset purchase creates a security entitlement, a tokenized ownership record compliant with UCC Article 8. You hold SES in a Figure Market self-custody wallet, and they're tied to underlying assets secured via the MPC. So your assets are always redeemable one-to-one for the underlying asset. It's fully trackable on Province blockchain. It's publicly auditable, and it reduces risk of decentralized mismanagement. Then it offers fast, transparent, and fee-free trading. It also offers cross-collateralization, unlocking liquidity without having to sell, where you can use your SESs or crypto assets like Bitcoin, Ethereum, USDC, or Hash, and again, hopefully in the future, maybe XRP, who knows, as collateral for loans. This system places a hold on your collateral, but keeps it in your custody. Once repaid, you gain full control. So you never have to exit the market. You can lend out your assets, borrow against them, pay your loan back, and then boom, you're back in the game, never having to sell. You got what you wanted via the nice house or the nice car, whatever, right? And you stay liquid. This allows you to unlock liquidity from diversified holdings without giving up ownership or transparency. Last but not least, it mentions regulated assets, a blueprint for compliant DeFi. Figure has taken a novel approach to launching the yield-bearing products within regulatory frameworks. One of the biggest examples is YLDS, the SEC-registered yield-bearing stablecoin on a public blockchain. While YLDS was introduced as an SEC-registered public security, a first for stablecoins, it sets a precedent for how blockchain-based financial instruments can comply with U.S. law. The platform's upcoming tokenized right will operate similarly to conventional rights, but on-chain. This move reflects the company's effort to work with regulators, not around them, and build long-term infrastructure for tokenized finance. So In a nutshell, to kind of wrap this up, I had one more thing that I wanted to go over, but before that, these are just some links that I'm going to drop. This is a whole entire recent conversation that was reposted on June 3rd with an interview via the CEO of the organization, Figures Markets. Definitely give that a listen. I'll drop that in the Discord for you guys. Here is the Figures Markets LinkedIn profile. And on it, there's another very long video breakdown panel discussion. It's about 20 some odd minutes long of another interview with their CEO. I will also drop that in the Discord. It goes over thoroughly how to navigate their platform step by step, which I thought was powerful because it actually shows you the platform itself. It shows you the interface. It shows you how to click on things and where to go. If you guys do want to get started, again, up to you. Make sure that you do your own research on it before you decide to make that move. But I'll drop that also in the chat so that way you guys have it so you can watch it yourselves. And then I will also drop the link to the website, and you guys can obviously see right here. What I like is that it's very simplistic. You can choose whether you're an institution using the platform or whether it's going to be a personal account. Here's what it looks like once you do get into the dashboard after creating a platform profile. What I highly suggest you do is you go straight down to the Learn tab right here on the bottom left-hand side, and you read all of these tutorials. I did myself, and I learned a lot about how to use the platform, how to get started, and it made it all very transparent and easy. I literally had no questions after reading all of these thoroughly. So I will also drop the link to that so that way you guys can do the same. Back to this. This is the last piece I wanted to read. This is directly from the CEO of Figures. So he said here in this post, and this post is recent from April 26, 2025. There are a series of blockchain events that are happening that will have massive impact on financial markets. So pay attention to this thread as we close off today's video breakdown. Hopefully you guys have enjoyed. If you have and you're watching this as a YouTube recording, do me a favor, smash that thumbs up button and subscribe. I feel like this is confirmation that in this community here at CYPRX, we are providing valuable information that most people are overlooking in this space because they're controlled and manipulated by fear tactics. They're disoriented by market price action volatility, and they don't really know where to go to look for sound fundamentals that prove that this is all going to be regulated in the future. We are going to be our own banks, and we are going to operate on a level playing field with financial institutions, regardless if you approve of this or not. Now's the time to start to educate yourself. So to continue this, it says, first, stablecoin legislation is going to happen by the August recess. That is according to this gentleman's prediction. I'm not saying that that is or is not going to happen. The legislation will effectively create 3 buckets of coins: bank coins, yielding coins, and tether. Bank coins, or non-interest-bearing stablecoins, will include USDC, JP Coin, and others. Yielding coins will be securities and governed by the SEC, not the stablecoin legislation. Tether won't be allowed in the US. If it was, there's no need for legislation. We can all move offshore and be unregulated. With the bank coin, the banks are going to start creating payment rails for stablecoins. This is critical, as trying to disrupt the US payment ecosystem without bank participation would be an exercise in futility. Unfortunately, we and others will lobby aggressively that yielding coins should work on these rails. Whether we are successful or not, ultimately, there will be yielding stablecoins that function as a payment. There already are. When individuals have the choice of self-custody yielding stablecoins that can just as easily be used to buy coffee, what did I just say to you guys a second ago, as easy as it is to buy Bitcoin or securities versus a traditional bank account, at least some people are going to opt out for self-custody coins. This is where it will get interesting. During COVID, an influx in bank liabilities deposits went from around 13 trillion in 2020 until they peaked at about 18 trillion in early 22. During that time, credit markets were heavily bid. Banks were buying anything with yield, paying through fair market value. Then deposits reversed, dropping from a low around 17 trillion in early 2023. That 6% drop in deposits caused the credit markets to stop functioning, along with and causing bank failures. If you guys remember, back in 2023, we had FRC and SVB. So if yielding stablecoins, a bank deposit alternative, causes even a modest outflow in deposits, the credit markets and the banking system is in for a wild hurt, unless Figures is playing both aspects of this macro event. In February 20th, 2025 of this year, we went into effect with YLDS, a public security, public blockchain stablecoin that pays interest. We're working to build out use cases for YLDS, including exchange collateral, DeFi collateral, cross-border remittances, and payments. So we are contributing to this potential deposit flight with YLDS. To wrap this up, it says, the opportunity that we face, both quantum of economics, but also of leveling a financial playing field that has always been tilted towards banks, is why I left FinTech Web 2.0 to come to Web 3.0. This should be an interesting next few years, right? So, huge post here from this gentleman, Mike Caney. Lots of things I feel like we've talked about in this community. I want to play this very last video clip, albeit now I kind of feel like not playing it because the volume is kind of low. But this is a video clip of another institutional representative on stage, and he talks about exactly what Mike Caney says in that post, how eventually rate cuts will drive demand for more yield and crypto at the same time, and we're going to see these yield-bearing platforms or anything that generates yield garnish the attention of institutions at a major scale, especially when the Fed and other central banks start to slash interest rates. So let's see if you guys can hear this, and then we'll wrap it up here. Hopefully the volume gives me a little bit of a break. Let's see if this next gentleman speaks a little louder.
And then as for the idea of just holding your own token, a lot of treasuries, they have that inherent bias in their balance sheet, but they actually want to diversify away from it because otherwise the value, if their business is declining, the value of their treasury also declines. And so they want to try and offset that. I think one of the most interesting trends I've seen over the last few months has been the compression of spread between the on-chain yield or required return, that i.e. the hurdle that folks like Maker and Sky need to hit, versus what's available in the real world. So if you look October-ish last year, Sky savings rate was something like 12%. If you look at where it is today, it's something like 4.5%. So that compression, T-bills were still 4.5 to 5 back then. That was a 7-point spread, and now it's closer to like half a percentage point. And so we've seen the yields on chain really compress, and with that, people are searching for other opportunities. Hence partnerships like ours and like Centrifuge. But I think it'll be interesting if we look out the rest of this year. If you do see yield cuts, which push up the price of risk-on assets, then the BTC basis, so the kind of the risk-free rate you can earn on chain will spike, and then you'll see on-chain yields really start to diverge from traditional finance, and so that'll be that'll be really interesting to watch because we've seen them come much closer together, but if you see a rate cut and you see a bull market again, the two will totally diverge.
Right. So I just wanted you guys to hear him talk about the possibility of these yields spiking whenever they slash rates and how that could possibly come into fruition. Right. So yet again, just giving you more information as to why you guys should be paying attention to this stuff. I will drop all these links in the Discord for you so that you guys can take them as a base, lead off of them, go do your own personal research. As always, many blessings to you guys. That's all I have today for this video breakdown. I'm going to leave the floor open for our private community if they have any questions. If you're watching this as a recording, do me a favor, smash that thumbs up button and subscribe to the platform. We do appreciate the love and the support. With that being said, I'll see you guys in the next video breakdown.